What's up, everyone? It's Eric with Option Edge, and we're coming at you with another one today. We got Lam Research, and this is something I put on yesterday. I wanted to share this earlier, but I didn't. So now I'm showing it to you now. So we had a 3 inside up trigger in Lam Research, and we've had some very good results on our last 2. If you remember Octa, we had a great. Let's look back at Octa here. Let's look at Octa. We got this trigger. We got red, green, green. This triggered, and we went boom straight up since then. I closed out a little bit early. I always seem to close out early. And then Elastic had another good one. I believe it was red, green, green was the trigger here. We had a big red day the next day, but then it just went straight up. So the difference here between those and if you look at both Elastic and Octa, they were coming off like a pretty big local low. So let's go back to our Lam Research, and we're at basically all-time highs here. So, so that's the one concern. So I feel like this isn't as strong of a signal, but the one thing I do like is that the Bollinger Bands are very tight here, and I have a Bollinger Band with what do you call it? Reader. And if you look back, it's been quite some time since we got as low as we are currently at. So this was a year and a half ago, January 20, 2020. So that's another thing. But here's another thing that is a little bit concerning about this is I anchored the VWAP from a local high, and we're literally right at it. And today we actually were above that VWAP, and then the selling came in, and we literally closed right at that VWAP. And if you look at one of my other videos in CCIV, I talk about VWAP and how that plays, how it's a good indicator. And then another thing to look at. So another thing to look at, I'm looking at, these are the moving averages, the simple moving averages and the exponential moving averages. I have them all on the chart here. Currently, we're at 624.43. We're sitting underneath the 5-day exponential, the 8-day, the 10-day, even the 13, the 21, and the 50-day SMA. We're above the 200. Right now, we have a lot of resistance, but if we can get through that, man, this thing will take off. So before let me show you something. So let's look at the back test. Here's the back test for the 3 inside up in the last 2 years. So in the last 2 years, this has only triggered 3 times, and it's been 3 wins. If we go back, let's go back 3 years. Let's say 3 years. 3 years. Okay, you can see in 3 years, not as good of a trigger, but nonetheless, the return was great. The win to loss return was pretty good. And so that's sure. Let's go 5 years. Let's see 5 years. And remember, history doesn't necessarily repeat itself. Again, pretty good returns. So I'm confident with this trigger, but we just need to break through that overhead resistance. And let me show you, this is what happens if I set our technical open to just crossing. This is crossing up through the 10, and now I'm setting it to crossing up through the 5. And if we cross up through the 5, and this is just 14 days, let's try like look at the 50 delta call. Let's try 30 days. Let's see what happens with that. All right, not quite as good, but you can see the 20 delta call is pretty amazing. So we might be early on this trade. That's what I'm trying to say. We might be early on this trade, but I like that even though I was talking about the Bollinger Bands, we are at the bottom of the Bollinger Band for that, which I like. We're still up a little high. We could fall down to the 600 support level there. But overall, I took a big swing at this bet. Here is put a big chunk of change on it. This is what we did. So we went ahead and we sold to open. We bought to open. Sorry, the 625 call and then we 625 call with the August 20th expiration, and then we sold the July 23rd call 675. I don't know if the 675 is right. I believe it was the 670 call. Okay, so that should be six. That should be. Let's do 670. Okay, so but I think the price is right there. So it costs $2,691. Okay, so that's a lot of money for me. Let's look at our break evens. Let's play with our. Let's say, what's 1 week, 2 week? Let's do. I don't know. Let's do 3 weeks. July. That's what. July 8th. All right. So the blue line represents our P&L on July 8th, and then the orange line represents the P&L on the expiration of the shorter dated contract, the contract we're selling. So, okay, we're currently at 624. The price is at. So, if we don't move at all in the next 3 weeks, we'll be down $200. So our max loss is we lose everything, the whole price. So let's say, if we move up, we need to break even on this. We just need to move up, 630-ish to break even, 632 upon expiration. So that's not too bad. That's what's great about these diagonals. They sort of, if the stock doesn't move much, we can still, it just minimizes our risk. And I've also talked about theta decay and how I haven't gone into too much detail, but basically we gain theta decay by being short an option that is half the expiration date of the other option. It's a little confusing. I'm going to put out some info on that shortly. But for the most part, that's it. We need to break through that. Let's go back. We just need to get through this wall of resistance. So it might be early to this trade, but we'll see what happens. Anyway, hope you enjoyed this, and good luck out there. Peace.